Hello and welcome to this week's Corporate Roundup. To begin with, we have Adani. What we are picking up from sources is they are in talks with various banks to tie up for the ambitious project. We have Swaraj with us to take us through which are these banks that Adani is in talks with for the Australia project.
Hi Amrita. So Adani Group is in advanced talks with the Exim Bank of Korea and some Chinese banks to raise up to $1 billion for its $10 billion coal mining project in Australia. These efforts come in the backdrop of State Bank of India's decision to not go ahead with an earlier agreement of a $1 billion loan to the Adani Group. Also, several other international banks such as the Citigroup, Deutsche Bank, JP Morgan, Morgan Stanley and Goldman Sachs have earlier refused to fund this project because of various environmental issues involved with the project. Another development is that American equipment manufacturer Caterpillar Inc. is also in talks with Adani to join the mining project, which will involve the development of a coal mine and related infrastructure such as a rail line and a port in the country of Australia. Thank you.
Thank you, Swaraj. In another development, Reliance Industries infrastructure sharing with ONGC seems to be in trouble. What you're picking up from sources is that could be called off. We have Promit with us to take us through those details.
Yes, Amrita. So in July 2013, ONGC and RIL had signed a memorandum of understanding to share the latter's infrastructure in the KG basin, where RIL already has an existing infrastructure and ONGC is yet to develop its field. However, after 1 year, around July 2014, ONGC had alleged that RIL had been drawing gas as a kind of theft and pilferation of gas from its own KG basin. So that's why ONGC at that time had filed a litigation in the court, and currently the case is on. So therefore, because of this kind of an animosity this is developed between the two companies, ONGC has quietly called off the entire MOU and wants to develop its own infrastructure. So this is actually in a way loss for both the companies, as this will impact the company's future cash flows, as well as RIL, which was already having an existing infrastructure, will not be able to draw money on that.
Thank you, Promit. In another story, Ultratech seems to be facing tough competition from that proposed merger between Lafarge and Holcim, where the expectation is they could lose their market leadership position. We have Vidya with us to take us through those details, take us through the capacity figures and how things changes post that merger.
Yes, you're right. The merger between Lafarge and Holcim is definitely posing a big threat to Ultratech, which is currently the market leader in the RMC segment. Because if you see last fiscal, Lafarge sold about 2.6 million cubic meter of RMC, while ACC, which is a subsidiary of Holcim, sold about 2.1 million cubic meter of RMC. So if you combine, it comes to about to 4.7, which is close to what Ultratech has been selling for of about 4.8 million cubic meter of RMC. Hence, it definitely poses a big threat to Ultratech. However, it is very difficult. It is a very difficult market to enter, as there are lots of local players here, and plus the market, the margin is very squeezed. But the only positive thing is once the industrial sector and the infrastructural sector opens up, there might be more demand for RMC, and the market might open up a little bit.